I was recently contacted by some buyers who were looking to purchase their first home in Toronto that believe that with interest rates high and expected to rise a bit higher, the number of variable rate mortgage holders having hit their trigger rate, and other homeowners on 2 to 5 year mortgage terms having to renew in the next year with higher interest rates, that homeowners would start defaulting on their mortgages and the power of sale market would have some great opportunities to pick up a deal. For those unfamiliar, a power of sale is when a bank, under terms of their mortgage, seizes control of a property and lists it for sale. This occurs after the homeowner has broken the terms of the mortgage. In most cases, this is when the homeowner has stopped making mortgage payments, but it could also be triggered if the homeowner has stopped paying property taxes, has stopped insuring the property, or is doing illegal acts at the property. It is not triggered by lowering home values or a mortgage being underwater. As long as you as a homeowner are making the obligatory payments around the property, you're generally safe. After some detailed discussions with these potential homebuyers on what their main concerns are in buying a home,
There were many. They were first-time homebuyers.
whether they had any experience in renovating a home,
They had none.
whether they were open to learning and getting their hands dirty,
They weren't really.
and what they were actually looking for in a home.
Modern, updated in the last 10 years, pretty much move-in ready.
It became clear to me that a home under power of sale was probably not a good fit. In today's video, I'm going to go through what you're getting into buying a home under power of sale and some reasons why you might want to avoid buying one. I'm going to go through a handful of power of sale properties that are on the market today at the end of December 2022, and also the type of buyer that might benefit from seeking out these types of properties. For those of you that don't know me, my name's Jonathan Lee and I'm a real estate agent here in the city of Toronto. If it's your first time catching one of my videos, I'd appreciate if you click the like button. It's how YouTube will know my videos are worth sharing. And if you want to catch more videos on real estate in the Greater Toronto area, click subscribe. I plan on doing a video a week in 2023. If you're confused about the real estate market and want to chat about whether it's a smart time to buy, sell, or make a move, you can click on the link below in the description and schedule a call with me through Calendly. So what is the difference between a foreclosure and a power of sale? Power of sale is the most common used method for a mortgage lender to seize control of a property and sell that property here in Ontario. It's similar to a foreclosure, which you often hear about in the US news, except a foreclosure means that the mortgage lender has actually transferred title of the property into their name. Power of sale avoids that transaction, but the lender still acts as a seller, signing all the sale documents, which the terms of the mortgage allow them to do. This avoids the transactional costs such as land transfer tax and additional lawyer fees, and retains the financial liabilities for property taxes and utilities on the homeowner. There are a couple of terms that are universal with power of sale properties. The first being that they're all sold as is. Selling a property as is means that there are no warranties on any of the properties, the land, the fixtures, or any of the chattels or appliances that may be included in the sale. There is limited information and generally limited knowledge available about the property as it's being sold through proxy of the registered owners, i.e. the mortgage lenders. Home inspections are generally allowed in these types of sales, but may be limited. Often the water and sewage lines are disconnected to avoid any types of catastrophes as these properties aren't regularly monitored, and sometimes electric and power lines might be disconnected as well. And of course, if an issue is found, the sellers aren't open to remedying the issue as you really are buying a property as it exists. As is homes can also have some implications regarding the specifics to the title of the property. Title insurance, which is an insurance that's purchased on closing of sale, that may cover items such as property boundary issues or rental items that weren't disclosed, generally won't cover homes that are sold as is, as the sellers are unwilling to warrant the accuracy of any of the information. So seriously, buyer beware. The second common term is the lenders are required to ensure that the property had adequate market exposure and that any interested buyers had adequate time and notice to submit an offer. Usually this manifests in the lenders not being open to reviewing any offers until 10 to 14 days on market have passed, and any offers being submitted requiring 2 business days to be considered, which allows plenty of time for another interested buyer to come in and submit an offer as well. So a buyer coming in and offering on an as-is property can easily end up in a multiple offer situation, even in a down market. Though the lender acting as a seller has its own interest to ensure they can get their money back for the mortgage, any amounts that are beyond what the lenders and any second and third lenders are owed, what property tax and utilities are outstanding, are due to the homeowner. And the lenders still have a fiduciary duty to attempt to maximize the return of the sale on the property. This means they aren't just going to accept the first lowball offer even if they have no emotional stake in the property. They still have a legal stake in it. Now, as a realtor who knows what actually helps get his property sold, I'm stopping short of saying that lenders are required to maximize the market value of a property, as market exposure is only one of 6 or so factors that will maximize market return. Condition of the property and how it presents is actually equally, if not more important. And power of sale listings almost never put any effort into improving condition or presentation. Which brings me to my next point on power of sale homes, that most homes under power of sale are in below average to poor condition. Even in good economic conditions, there exist power of sale properties. Usually the owners have over leveraged the property with multiple mortgages, some with alternative lenders, meaning mortgages that are charging significantly above standard bank rates. And for these homeowners, defaulting on their mortgage doesn't happen within a couple years of taking ownership of their home, but over many years. Ernest Hemingway, in his novel The Sun Also Rises, has this dialogue where one of his characters is asked how he went bankrupt. And his response is gradually, and then suddenly, which is a good summary for how these homes ended up going under power of sale. If you can imagine a property that was owned for a number of years and over leveraged, often they weren't maintained very well. They have some maintenance items that were deferred or projects that were started and never finished. These homes often need some additional capital expenditure by the buyer to make them comfortable. Sometimes I'll see power of sale listings that have been liquidated of whatever chattels remain on the property that did have value in an effort to recoup some of the monies owed. Things like the fridge, stove, washer, and dryer. So this could be another high expense that a buyer might run into as well. Now, with all that said, power of sale listings are on the rise. A quick query for the MLS systems for all residential, condo, and freehold listings for 2022 with the seller's names containing the words power of sale for all Toronto, Durham, Peel, York, and Halton regions. That was a mouthful. Had the total listings at 151. For 2021, it was 106, so a meaningful increase. Disclaimer note, those numbers don't represent the complete list of all homes that are being sold under power of sale. Some listings are sold under bank names, corporations, or other private lender names. I would expect the number of power of sale homes to continue to rise in the next year, and of course with them the likelihood that there will be some beautiful move-in ready homes as well. But it will be a small subset of all power of sale homes. If one of these beautiful homes was purchased in the last 12 to 18 months or so, then there's a good chance that its market value and remaining mortgage on the property will be high, and the lenders will unlikely be open to much negotiation, as doing so will put them in the red, and lenders aren't in the business of losing money. Now let's go through a few power of sale properties together. Alrighty, so I have 5 properties that we're going to go through together. The first property is 68 Robert Street. This is located right around Jane and Lawrence, and this property has been up for sale since August of 2022. Originally listed at $799. Now in late December of 2022, it's listed at $725. It's being listed by Esther Gersel Incorporated. Quick Google search makes it look like this mortgage financer is related to Howard, the jewelry seller, and the owners have owned the property since 2008. They purchased it for $250 about 14 years ago. So it just kind of goes to show you that it's not just recent buyers that are affected by these interest rate hikes. Most likely they've mortgaged the property a couple times, perhaps to fund other purchases or other investments, and that's how they are where they are right now. So high level view of the property. This looks like it's most likely was a 100-plus-year-old home. There were some updates made to the home, but just kind of going by the design, I can see that they've updated the windows here. It's got this more modern design. This is a 2-bedroom home with 1 bath. It's got a good sized lot, 32 by 116 feet. The interior, it looks like it's in fair shape, though not particularly contemporary. You can see it's got this wood trim, this knotty pine trim. Just going by the pictures, it looks like there was some modifications done to the home. This was likely not done to code. I can see this opening up to the second story here is not particularly wide. There's no railing here. You have exposed risers going up to the second floor. Decent looking bathroom, wood floor all throughout, and a nice looking kitchen. You have this exposed wood timbers frames, as well as this vaulted ceiling here, but this home is not particularly large. Going into the basement, it does look like it requires some work. I'm going to guess that the home probably wasn't waterproofed, and on a 100-year-old home, the water will have worn through the foundation with time. Going into the second story, this is going to be one of the areas of the biggest struggle, is that this probably was not designed to be much of a living space, perhaps like an office or work area. And it most likely has a pretty low ceiling, maybe 6.5 feet right here, going down to maybe 6 or 5.5 feet or so towards the window. So home certainly does need some elbow grease to update. Basement not in the best condition. You can see that there's some crumbling of the foundation here. It's all completely unfinished. However, at $725, it's actually not a bad deal in my opinion. You're pretty much buying the home for land value and getting the house on it for next to nothing. On to the next one. So the next one we're going to be looking at is 190 Combe Street. This has been on the market since October. It was originally listed at 1.2 million and has since come down to $1,089,000. It's being listed for sale by Home Trust Company. So they are a well-known B lender. So they're not quite private financing, but they're not, one of the major banks. Generally, these B lenders will charge 2 or 3% above what the major lenders will charge, and they're more open to taking, I guess, riskier clients. So these might be people who are commission salespeople or are small business owners. This property was purchased in 2016 for 1.13 million. I don't know what the initial intention was with the property when it was purchased. This property is located right around Dufferin and Shepherd. My guess it was purchased as an investment property, and most likely if the owner has multiple investment properties, this is the lowest performing one or the property that they're least likely to hold on to. So they allowed this property to go into default, and since then it's been taken over by Home Trust. So even though nearly 7 years will have passed since it was purchased, it's being listed for sale at less than what it was purchased for. Hard to say what the condition of the home is. There's only one photo. This is also not atypical for power of sale properties. Sometimes they'll exclude the interior photos due to privacy reasons. If there are still a lot of possessions of the owners or their tenants in the property. And again, most likely with this property, the homeowner got over leveraged and defaulted on their mortgage. So the next one we're going to go into is 12 Harewood. And this is an interesting property. It's been listed on the market since July of 2022. It's located in the Scarborough Bluffs, and when it was first listed, it was listed at 1.2 million. Since then, it's come down to 1.1. The property was purchased in August of 2021 for 1.15 million, which seems like a lot of money for what the property is. It's just a small little bungalow on a 40 by 133 foot lot, but it was purchased with permits to build a large custom home on the property. Most likely the buyers had purchased it with the intention of building that home, but after meeting with a number of buyers and reviewing financing and realizing that the cost of construction has risen considerably since then, they realized that they could no longer do this feasibly and allowed the property to go into default. Going through the photos here, it's in livable but not in fantastic shape. You can see in the kitchen, it does need some elbow grease. It most likely was tenanted for the last year or so. The bathroom looks like it's been updated in the last 5 years or so with more of a contemporary design. And going into the basement, you have what looks like some early stages of what might have been another unit retrofit. It looks like they had been framing the walls here. Likely they were hoping to hold on to the property until they could secure more financing or until market conditions had become better on the building side, but it likely never got to that point and they went into default instead. And so this property will be sold at a loss. If you just kind of go by the numbers, they had purchased it at 1.13, assuming that they had put in even more than 20% down, maybe going as high as 30% down. That would put the mortgage at 800,000 or so, but potentially there are secondary mortgages as well, and so that's why the property still does need to sell around 1.1. So here's another interesting property, 1 Allenhurst. This is located in Etobicoke, right around Scarborough and Eglinton. This home has been on the market for about 40 days or so. It's being sold by Fast Fund Incorporated. Again, a small lender, most likely a private lender. It's listed at 1.7. The selling conditions are a bit ambiguous. It looks like there's an offer date on here for November 25th. However, this has not been updated, so it's not clear whether their expectations are above what the actual list price is. The last trade in title that I could see on the property was from April 2022 for 2.6 million, which is a large amount. I can see that it's currently tenanted. The property itself is interesting because it looks actually like it's in very good shape. There are some things about this listing that do bother me a little bit. These photos look absolutely horrendous. The building itself here isn't even centered. The colors are all terrible. It looks like it's got modern contemporary design. It's been updated. You got this beautiful kitchen here. They could have spent a little bit of money and invested in some really high quality pictures. Every potential buyer will be going through the photos before they go to see a property, so why not do that? But they didn't. This property would be a clear instance of someone who had overextended themselves in the market recently, and rising interest rates forced them to default on their mortgage. Assuming that they had put 30% onto this home and 70% of the home was financed by Fast Fund, that would put the actual mortgage amount above 1.7 at around 1.82 million. So there's a good chance that the seller's expectations and requirements to sell the home are above what the actual list price is. One of the issues with buying a tenanted property that I should note as well is the buyer has to assume the tenants. So if the tenant has 2 years on their lease and their lease is outstanding, the buyer cannot raise the rents or occupy the property until the lease has expired. So that's definitely one of the problems that the buyer has to take over themselves. And the last home that I want to go through with you is 144 Dunblane. This is located right around Avenue and Lawrence. Just going by this single picture that's listed here. Again, it's only got the picture of the front. You can tell that it's a luxury custom home. It was built in 2005 and it's being sold by an Ontario corporation under power of sale, listed at 2.975. The owners had purchased it from the builder back in 2005 for 1.1-ish million. Right around that price range. So again, just kind of goes to show you, it's not necessarily buyers who have purchased recently. However, these sales are not going to be sold significantly below market value, even if potentially the home had been refinanced and they require only, say, 2 million off of the property to be able to recoup their costs. So clearly this one, with its lack of interior photos, it could be a good deal. It could be a good buy if it's actually in great shape and it's exactly where a buyer wants to be. But we don't know this. So this actually might be a good option to investigate.
Having said all this, I think exploring power of sale opportunities may be appropriate for the right buyer or investor. And these are buyers who are experienced and are open to doing large rental projects and retrofits, buyers who are open to investing a little bit of money in order to perform adequate due diligence in a short period of time, or a buyer who is open to a risky buy at a discount for the potential financial upside. There is a strong investment component to this, and I've seen some power of sale properties sell at really great prices because they were very unattractive properties and the owners had defaulted on an amount that the lenders could easily recoup in a down market, even at below market prices. But these are really only great buys for the savvy and impartial investor that are able to decouple themselves from the emotional aspect of real estate and only focus on the financials. Many investors don't quite fit that profile, as the features, the condition, the location of the property still means a lot to them. So that's it from me. If you found this content helpful, I would really appreciate a like and a subscribe. It costs you nothing and it'll help YouTube know that my content is worth sharing. And again, if you want to reach out, click on the link below in the description, schedule a time and we can have a chat. I'll catch you guys soon.